So Kaspi.kz, the stock popped after earnings, but if you just looked at the headlines, you'd miss the real story. There are some serious headwinds brewing under the surface. So in this breakdown, we're going to dig in. We'll look at what investors actually liked, what's putting pressure on the business, and of course, what this all means for the stock.
All right, let's start with the market's instant reaction, a pop of over 3% on the day. Now, what does that tell you? It tells me investors weren't just looking at the surface level stuff. They looked right past the noise and clearly liked what they saw in the core business and what management is doing with their cash.
Okay, here's our game plan for today. We'll start with a quick snapshot of the earnings, then dive into the headwinds and the progress they're making. From there, we'll look at management's playbook, set up our thesis for the next earnings call, and wrap it all up with our rating and the risks.
All right, let's get right into it. Section 1, the earnings snapshot. What did the numbers actually look like? So, at first glance, things look pretty good, right? You've got revenue up 20% year over year and net income climbing by 12%. I mean, that's solid double-digit growth. On any normal day, that's exactly what you want to see, setting the tone for the call. But, like I said, those headline numbers, they don't give you the full picture. So let's dig a layer deeper into the headwinds and how they're navigating them. You know, management was really upfront about the challenges they're facing. These are external things, not really their fault. The big one, the absolute elephant in the room, was this huge disruption in smartphone supply. But that's not all. They're also dealing with higher interest rates, a new tax on some revenue, and the central bank making them hold more cash in reserve. It's a lot. And this right here shows you just how big of a deal that smartphone problem is. So their total marketplace GMV, that's basically the value of everything sold on their platform, it grew 12%. Okay, not bad. But look at this. If you just pull smartphones out of the equation, the rest of the marketplace grew by 20%. 20. That is a massive difference. It's like one product category is dragging the whole amazing growth story down.
Now, the big question for investors is, okay, when does this end? The good news is management laid out a pretty clear timeline. It started back in the spring with some new rules, and then it got worse this quarter because they just couldn't get enough of the new iPhones. But here's the date you need to remember, March 2026. Why? Because that's when the year-over-year comparisons start looking so much better. The tough part will be behind them.
Okay, so with all those challenges swirling around, what's the game plan? How is the company fighting back? Let's get into management's playbook. And this, for me, is where the story gets really, really good. Forget all that external noise for a second. Look at how their users are behaving. The average person is now making 76 transactions a month. 76! And they're buying more stuff, too. Purchases are up 36% in the marketplace and an absolutely staggering 86% in e-commerce. This isn't just a casual app for people. They are living inside the Kaspi ecosystem. And believe me, management is not just sitting on their hands waiting for things to get better. Nope, they are pushing ahead with some really cool stuff. We're talking about Pay by Palm, literally paying with your hand. They're launching an AI assistant for their merchants. They're expanding their payment network with AliPay Plus. Oh, and by the way, their advertising business? It's just quietly exploding, up 56%. That's a serious new growth engine right there. And that AI tool, it's not just some buzzword they're throwing around. The CEO himself, Mikhail Lomtadze, gave this incredible example. They took a regular product, used their AI to beef up the listing, and boom, sales for that product shot up by 83%. 83! That's not a future promise, folks. That's cash in the bank, right now. And then came the mic drop, probably the biggest signal to the market in the whole report. Right in the middle of all these headwinds, the board says, you know what? We're going to buy back $100 million of our own stock. I mean, that is a massive, massive vote of confidence. It's management screaming from the rooftops, we think our stock is cheap, and it's a direct reward for shareholders who stick around. All right, so let's put all these pieces together. What does it actually mean for the stock from here on out? It's time to build our thesis for the next call. So looking ahead, we're watching 4 key things, 4 potential catalysts. Number 1, how fast do they actually spend that $100 million on buybacks? Are they serious? Number 2, any good news on the smartphone front before March 2026 would be huge. Number 3, we need to see the data. Are people actually using Pay by Palm? Are merchants adopting the AI? And finally, number 4, just keep an eye on the bigger picture. If interest rates start to come down in Kazakhstan, that could be a huge tailwind for the business.
Okay, let's bring it all home. You've got a super resilient core business, some really clear catalysts on the horizon, and a management team that's clearly on the side of shareholders. So what's the final verdict?
We're rating this an outperform. Here's why. We think the market is just too focused on the short-term pain from smartphones and the macro stuff. What they're missing, in our view, is the insane user engagement, these powerful new growth engines in AI and advertising, and now this aggressive plan to return cash to shareholders. It's a classic case of short-term noise masking long-term strength.
So really, it all boils down to this one question for you as an investor. Can you stomach a couple more quarters of ugly smartphone numbers? Because if you have the conviction to look past that temporary headache, you've got a powerful buyback in real AI-driven growth that could propel this stock much, much higher. Maybe even before that smartphone issue completely goes away.
And, of course, a quick reminder, this is not financial advice. Please make sure you do your own research.